welcome, traders. A big warm welcome to my first market analysis for the year 2022 and Q1 2022. It's January, and yes, a big warm welcome. I do anticipate a good year of growth as we got in 2021 in terms of trading opportunities. And just kicking right off, having a look at some of the fundamental concerns I'm carrying over from Q4 21 into Q1 22. Just having a look here, you know, the inflation rate we haven't got the new one just yet. I expect it'll be anywhere between 6.8 and 8, possibly even as high, you know, above 8, possibly around 8.6. Let's have a look and see. The point is really that overall the economy is looking relatively strong, even globally as well, although there is some inflation. Really, it's what you would expect in line with spending, and so it's not necessarily out of control. The real concern here is just that how much will inflation affect, you know, how much tapering will come as a result, as a consequence of that, and therefore how will that impact lending and borrowing of cash. That will then impact the bigger institutions. They potentially will then extricate themselves from the markets, and we'll have a bit of a correction in the markets. That's what it really comes down to, if we follow the kind of knock-on effect. Then if we have a look at the S&P Euro Swissy, again, there's no real language where they're talking about concerns or any fear of intervention, I beg your pardon. And that's usually something they will do as a first step. They want to kind of spook the market, so they'll talk about it before they actually do something to see how the market responds to that. They don't seem concerned at this point in time. And just generally, I would say the way that I would put it at this point in time, unless something new, some other kind of black swan comes along, the markets at this point generally seem to be healthy. And so I think at this point in time, aside from the usual corrections, the market gets a bit hot in here and there. My overall expectation at this time for 2022 is continued growth as we've had in 2021. Okay, so that being said, let's move on to the economic calendar. So this week I'm going to be focusing on US dollar markets. It's really a bit on Tuesday, Wednesday, a little bit on Thursday and Friday, really just focusing on that. You know, potentially I want to hear what the Fed has to say about, they're probably going to talk about how their rate of tapering is going to speed up. That's not necessarily a surprise. So nothing here that's necessarily a surprise, but this is where I would expect some more volatility, and I've added in medium impact news as well, just for the benefit of day traders. So that's really what I'll be focusing on, just where I'm making sure that if I do have positions open more for day trading, that I'm going to be cautious about those. Okay, that being said, let's go and move on to the charts. All right, so having a look here at the VIX, not really expecting much from it here this week. All right, so we've seen, we had lower highs coming into this. We've now got higher highs coming out of that. So it is attempting to climb higher. It's just not settling any higher. I don't expect much from it. We'll get what we get out of the markets, and so I'm not going to obsess about that too much. Okay, dollar index here. So main thing that's very important to take away from this is it is still range bound, and therefore I'm not going to commit to anything until I see a solid break and a close well outside of this range, either to the downside or to the upside, which I would prefer would be a break to the downside. Just seeing a nice correction here down towards 94.50 or 95. That would be very healthy before perhaps continuing to the upside. Showing a lot of rejection there. So it's not invalid, that idea. And so as I said previously, we might get a weaker dollar if we do get some, you know, it's a possibility we could get that. Again, that would support the monthly price action here. That looks like it might want to head a little bit lower. But of course, again, until it breaks out that range, I'm just not willing to commit. Looking at euro dollar here, it does look as though it's producing these high lows into a level of resistance. This week, what I'd like to see is a break. Again, a real strong close above 114, so 1.14. And then in that case, then I like the continuation up to 15.25. I really like the look of that. That could happen. Again, until it gets outside that range, there could be a strong rejection here this week. It could find its way all the way down to the bottom, and there's some potential, trading opportunities in that case. But not liking the look of it until we get outside of that range. Looking here at sterling. Okay, so sterling overall is looking the strongest of the bunch, relatively speaking. I'd really like to see a break above that 138 level. That would break this downtrend on the weekly. That monthly looking a little bit nice and bullish, not so bearish, and that daily looking quite nice and strong. So overall, that 4-hour price action structure also looking relatively neat. So I will keep an eye on what's going with the dollar and the euro, just because that may add to it. Certainly if we get that weaker dollar, we're going to get a stronger sterling, and this then becomes my favorite for day trading opportunities to the upside. I quite like the look of that. But if that dollar does come back strong and we see a reversal on that range again, then it's probably going to find itself in some resistance here and pushing back a little bit. Aussie and Kiwi against the US dollar, both of these are quite weak, and they're really just an absolute nightmare. Although we have, say, Aussie dollar producing higher lows and higher highs here, it's just a mess. That 4-hour is just ping-ponging all over the place. The weekly looks almost bearish. This is a nightmare. I'd absolutely stay away from it. Kiwi dollar, US dollar as well, I would do that. They're effectively weak in their own respect. That we're just seeing a bit of a push and pull between them, because there isn't much difference right now between the Aussie, the dollar, and the US dollar. They're kind of roughly staying where they are. So actually, I should say they're weak. They're potentially battling because we're looking at them being roughly equal to that in terms of strength and weakness. So not seeing a lot there, and I generally stay away from this. Dollar yen does its own thing. So BOJ, they've obviously got some really good traders there, and so they have quite a bit of control of it. Looks like it's setting up for a bit of a bearish breakout here, but it also could be seen as a bull flag if it breaks up above these highs. So on the whole, I would play it as it lies, meaning I would trade this not in relation to any of the other majors. I would play dollar yen as it lies. If it sends up with a bullish candle here, then I like the look of it moving to the upside. Dollar Swissy is a mess by comparison to euro dollar. It's not even really behaving well within a range. It is range bound currently, and again, if it breaks up below that or above the high, then I'll trade it in that direction. Until then, I'm just going to stay away from it. And then finishing off here with dollar CAD. So dollar CAD looking a little bit more like it's going to break to the downside. So if we do get that weaker US dollar, we'll get a nice break on dollar CAD, and then I like this for shorting opportunities, potentially down even as far as 1.24, 1.23. The 4 hours got some relatively nice structure here. It is looking as though it might potentially, these just a lot of rejections up here and exhaustion in these candles here over the last few months, and therefore it looks like it may well head low. So there are signs showing that it's not completely outside of the realm of possibility of a weaker US dollar this coming week. But again, as I said, I won't really commit into that, and I won't commit to that until I see it confirmed solid breakouts of that euro dollar and the dollar index. There we go. Let's have a look at the other currencies of interest. Okay, so having a look at EURGBP. So overall, it's slipping to the downside. I quite like that. I like the fact that we had a solid close on the weekly below the previous lows. All of that looking good. We've got a bit of a consolidation on the 4 hour here, and I would say breakouts to the downside would be what I would be looking at for the time being. I can see the daily here trying to retrace back up to 84 to test that for resistance. That is also a decent possibility, looking for resistance and a continuation to the downside. Alternatively, a nice consolidation and breakout to the downside. So I quite like the look of that. Then EURAUD. EURAUD looking quite nice and bullish. For the most part, I'm looking for long opportunities to the upside here. The same actually with pound Aussie, and of the two, pound Aussie looks more attractive to me. Some really nice pullbacks into these previous highs on the 4 hour or on the daily, coming back into those moving averages. And certainly once it gets above 1.89 or 1.9, pick your lane, whichever one you want, then I'm looking for continuation to the upside. So, but at first, I'm more likely to anticipate I take a bit of a pullback and then look if there's a buying opportunity there. Then moving on to Aussie CAD. So Aussie CAD looking nice and bearish. I like the idea of this trading down to 89 and looking for it to continue down there. So I'll be looking for pullbacks and continuation, certainly for day trading purposes. Then, and then on pound yen. Continuation to the upside. I am aware of this major level here at 158, and so yes, I do want to make sure I can get past that, or if I am looking for some moves to the upside, looking to make sure I take some profit ahead of that level, because there could be a strong rejection off that level. Principally though, at this point in time, I'm looking for moves to the upside there, continuation. And finishing off on CAD yen. So CAD yen also looking relatively bullish. I'm just keeping an eye on this level here. Might end up forming a bit of a head and shoulders, and therefore ultimately breaking to the downside. But so far that monthly is looking really nice and bullish. Does look like it wants to take another run at 92.50. The weekly is looking good as well. It's getting past these key levels at 91.25, and so I do think that there is a probability, a good chance that it's going to head up higher before it then decides if it's going to reject or continue up to the upside. I do like the looks of those. So those are my favorites in terms of currency crosses of interest. Okay, so with gold, I'm sort of leaning to the upside again. It is still within a range here. It's sitting at the bottom of the range. And so for now, I'll be looking for shorter term buys to the upside. I'm not seeing any signs of any longer term clarity or even medium term clarity coming to this. You can see if you look at the monthly, massive resistance sitting here at about that 1830 or 1825 level. So we really have to get past that for it to pick up momentum and start heading up higher a little bit faster. Right now, relatively messy, and I'll stay away from it unless I do see a bit of a trend forming on that 4 hour time frame. A little bit of a double bottom here on that silver on the 4 hour. That's looking a little bit more bullish than bearish, and therefore short term trading opportunities to the upside at this point in time. But actually that monthly starting to look more and more like it's testing the lows, thicky of actually heading a little bit lower. So a lot of those there's some concerns there for me. Copper still within this range. Actually, this would be coming through from December, not outside the range. Now it looks like it wants to test up against the highs. All of these, it just says caution to me. Then having a look at the sort of global commodities, in principle, this is leaning more sort of towards oils or crude oils or gases, natural gas, and so on and so forth. These are looking bullish. Nice little bullish candle. We started to break the high. There's no doubt there's going to be some strong resistance that we come up into this. So watching all the highs, especially the sort of, I say old highs, the recent highs, I guess you could say, looking with both West Texas crude and Brent crude, I'm sort of bullish until we get into these areas, and I'm looking to make sure that there's a possibility of reversals happening at these levels, but certainly bullish up until we get to those. Brent crude as well. Brent crude already approaching into that area, so there's no doubt in my mind there will be some resistance there, but I am nice and bullish up until that area. If I do see that 4 hour trends start to change throughout the week, then I might be looking at a deeper correction. But overall, this is certainly more bullish than bearish. Okay, moving on to other commodities futures markets of interest to me, looking at sugar. So sugar looking really nice and bearish. It's starting to pick up that downwards momentum. It was very messy, not really ideally, not good for trading purposes before that. Now starting to pick up a bit more of a bearish momentum. And so shorter term, certainly as we come down into these levels, I'll be looking for shorting opportunities if I see anything there. But it's looking a little bit better. Coffee, now, look, the problem with coffee is it's exhausted over here. So although I am bullish on it, this is a very dangerous trading opportunity for me. There's a nice strong bullish candle set up here, but I think we're almost immediately into resistance there. So I think what I may do is just keep an eye on it. I think I prefer to see it get past these levels and then look to continue up from that point, because the shorter term moves are going to be a lot more volatile and potentially more dangerous. Okay, wheat. Wheat is just generally quite choppy. It's now produced a lower high, lower low on the weekly. That 4 hour there has produced a double bottom, now starting to trade and move up to the upside. So there's conflicting trends on both. Means shorter term trades are the only way to go, and I'd be very defensive in that the trends are not aligned, or the momentum, bearish and bullish momentums are not aligned. And then cotton. Cotton again coming back up into these old highs, still looking as though it's struggling a little bit in the area. Same thing again, it's kind of similar to coffee and sugar. I'm just wary also. Sugar was heading to the downside, a little bit similar to coffee where it's up at these highs. I'm a bit cautious on that. But overall, again, I would rather prefer really deep correction down to 100 at least, or back into these old highs before resuming that trend. Right now, my expectation is probably that it's going to struggle a bit, and there might be some shorting opportunities before it can muster up some strength and continue higher. I'm leaning sort of more to immediately to the downside, and then medium term to the upside. Okay, that's it. So let's have a look at the global indices. So starting off with the Dow. So as I said, in terms of the stumbling, the markets have enjoyed really good moves. Enjoyed really, really good moves, and at the same time I also feel that we do need a bit of a deeper correction on the monthly. So I think that it's reasonable to expect that for the time being that there could be these kind of moves and a correction on the weekly, and a move and a correction on the weekly, until we kind of effectively get our way out of that. And so having deeper moves or moves to the downside on the daily, having these corrections and this general messiness compared to where we've had less of that in the past here, I'm expecting more of that for the time being. Overall, I don't really think the markets are inherently weak. I just think that it's a bit overbought. There's people who've been spending a bit too much. Maybe post-Christmas, everyone's going to kind of penny pinch for a bit. Who knows? I'm not really concerned with that. We are generally experiencing lower lows here on the 4 hourly, so we might have some further moves to the downside. So it just means exercising caution. If I'm a longer term, this is just personal, this is not financial advice. Longer term, I'm thinking, yeah, the markets will potentially head higher. Medium term, I think they're going to be incredibly choppy. They can go in both directions. And shorter term, I'm saying the same thing again. Potentially they're going to have moves to the downside, so I'm just going to exercise that caution. Looking at the S&P, for example, so we had a nice little shorting opportunity here. Same thing again, I'm saying there's a possibility for these deeper corrections. That weekly move, really nice healthy move up, then a correction, and then another move, a bit of a correction, another move up, and now a bit of a correction. So a lot of that happening, and you can see here potentially starting to head low. So it's not unheard of that we get really nice bull runs in February, so we could have a really messy kind of January before potentially picking up and pushing its way through to April. So just going to exercise some caution with that. Nasdaq as well, back down at the bottom of this range. If we break through the bottom of that range, I'd expect it to potentially head down to 15,000 or 14,500. Starting to look, to me, this is more of a monthly correction. And again, you can see the struggles that's happening over there. So I think this week, but we're still at the bottom of the range. We can bounce from a range. However, I'm leaning sort of 60% to the downside, 40% to the upside, but definitely cautious in terms of that. Okay, so we're still on the mini Russell. We're still within this range. Potentially going to head down and test the bottom of that range. Again, I always expect buy orders at the range, and they can bounce up from that. But this market is looking, it's just on the edge of those, of the lower levels. Looking here, for example, so this is where it gets interesting to me. As we head away from the US and we head off to the UK is looking really nice and strong, looking really good. Monthly looks good. A little bit of depletion, a little bit of exhaustion in this area. So 7,500 is certainly a level the market is watching. And so it can bob up and down around this area, but it's not looking like the US. And that is very interesting. So the DAX as well. Okay, a little bit of a indecision, depletion, double top there, a bit of a rejection off the highs there. It's just implying could be back within the range and start to head down to the lows. But not looking, generally so far, these ones not looking like the US markets. They're looking that they're a little bit more enthusiastic. Okay, so here we go. We're looking at Euro stocks. That bearish candle again off that level. So No doubt some strong resistance here, and therefore, again, there's a possibility if we break the low here, there could be a move to the downside, back into these lows here, potentially test the level before potentially climbing to the upside. So overall, they've kind of finished higher, a little bit stronger than the US markets. This is not a common thing to happen, and it implies that overall the markets are not necessarily that weak, but maybe just a little bit tight. And when I say weak, I mean inherently weak, and therefore there's a massive bear market on the horizon. I'm saying that they're just a little bit tight at the moment, and therefore that means increased volatility. Now, could we be at a turning point where we could be at the start of a bigger correction with inflation and tapering? Yes, we could be. We could look back and go, this was that point where the bear market, where the bull market was running out of steam and turning into a bear market. Yes, that could be the case. But for now, my focus is only on this week. And this week just means I'm expecting choppiness, but the markets have not yet decided that they want to head south all at once. Certainly, we'll see how it closes, but I'm considering the possibility there could be moves to the downside. But I'm just saying there's a difference between the US markets and non-US markets, and there's some optimism in some of those areas. Okay, so then the Nikkei, of course, still within the range, potentially wanting to head lower. Not a lot of clarity on that. Can actually go any direction. And now looking at Australian ASX, a bit of a rejection of those highs, indecision. And this market is really saying, look, it wants to keep going, but it's really not able to get beyond that level. So this is what I want to see. I want to see this week close at a much higher by the end of the week. I'm expecting volatility. I think it's very fair to say that based off this, the markets are looking a little bit more skittish in the US than they are outside the US, and that's very rarely the case. Usually if the US is looking less skittish than the rest of the world. And so, yes, I think there could be some expected volatility this weekend, so I'll just be really cautious with my day trading. If we do break above these highs, then I become more optimistic. If we start breaking to the highs to the upside, then I'll be looking for longs if we're getting especially into new all-time highs. But that's the possibility that's actually not necessarily going to be the case. Okay, so having a look at the stocks of interest, looking at Royal Mail out of the UK. Okay, so the weekly is really giving a lot of information. It's just exhausted over there. It is bullish. There's a lot of buyers below that, but just not a lot of buyers above a certain level. And so it's going to running its trouble. Okay, it's effectively running a bit out of steam. So far, the monthly candle, very, very small. I was hoping to see it run to the old highs. So unless there's a boost out of nowhere, I don't expect it to do that. American Express, Amex, looking good, but coming back into resistance up here. Okay, 180 is going to be a bit of a challenge for it. It's still effectively within this range. Looks really nice and bullish here. This is all really good. This is the problem. Okay, so I think, yeah, it's fair that it might attempt just to push a little bit higher. If we can close, again, solidly above that, I'm really optimistic. But having a look at the global indices, I'm thinking that's possibly not going to happen. And so there could be we could end up by the week a lot lower. We could touch it and then just reject it and fall lower. I hope that doesn't happen, but that is something that could very much happen. Having a look here, for example, at Apple, this is very much a bearish correction signal. Okay, so here it's looking like it's got its eyes on 166 down to 160, possibly even as far down as 155. That monthly showing a bit of a double rejection there, so I need to see how that's going to go. But this is looking like, at the very least, it's going to head down to touch these lows here. If it breaks through those, I'm expecting it to have a bit of a deeper correction down towards 160. Interesting to see that come from Apple. It's okay. Apple's had a lot of growth. It's okay for it to take a breather. It's tired. It's okay for it to take a bit of a rest. Okay, then we've got ARC Innovation. So poor old Kathy Woods. I'm always just a big fan of hers. But yeah, the bit of a deeper correction to this. Overall, there are reasons behind it. There are explanations behind it. But overall, not expecting much more from this just yet. Expecting it to potentially head down towards 70. We'll see if it can sort of stabilize at that point. It really has to do with the constituents. It has a lot to do with the constituents in this, where she got her growth ahead of the rest of the market previously. Whereas now the very ones that gave her the growth before are the ones dragging her down. So AT&T. So AT&T has actually rebounded. I'm very impressed that they managed to do this. I don't necessarily at this time, they've got to see how they deal with 2650. So 2650 is really going to be their challenge here, and to see if they manage to get past that. Bit of a move here. And so really I'm going to just see how we deal with this. They could potentially be range bound, finding their way back up to $30 a share. Alternatively, if they can't get past this level, I do expect them to then continue to the downside. So that is doing a little bit better than expected there, but that's fine. I don't want to be too biased on that. Now look at this. Berkshire Hathaway, beautiful consolidation breakout. excuse me, look at this nice little breakouts and a close above on the other side of that level and a continuation. So this is very good. So it had a really good sort of 6-7 month consolidation and then a breakout. So at this point, I think it's going to see if it can reach 350. I do expect it, aside from the usual kind of corrections on the daily, so nice little retracements and continuations, there might be some good swing trading opportunities on that. I really like the look of that. It's just broken out. It should have some steam. Let's see if it can get to 350. Might not be able to make it, but certainly 330, I would say, is a fair thing. And really, it's a consolidation that allowed it to do that. It's got some good potential steam on that. So I'm expecting some nice little retracements and daily swing opportunities on that one. Okay, BP. Okay, so BP also doing relatively well. I've got to see if we can get past this 30 mark here, but it is looking actually a bit stronger than expected. So again, we looked at the commodities, we looked at crude oils, we looked at the index over there as well, also looking nice and bullish, so therefore that would prop it up. Coca-Cola also having consolidated and broken out. That's a strong, solid consolidation. 65 is very optimistic, but it's not unrealistic. It's just on the optimistic side. For now, I want to see this do some retracements and some continuations up towards 62. Perhaps let's have a look at that. So again, that's a really good sign there. ExxonMobil will be similar to BP. It's also looking nice and bullish. This is an area that's going to cause it some trouble. But, and of course, 70 as well. I want to see how it can do. But as I said, overall, those crude and those natural gases and so on, those types of commodities were doing quite well. And therefore, that's probably going to help boost this. General Motors. Struggling, man. It's really trying to get through that. This is not the same as Berkshire Hathaway. This is really genuinely struggling over here, struggling to get through that. I think there's a good, strong possibility it could continue. It's going to take another run at that level, but will it succeed or will it fail and close lower? Then we go on to that's General Motors, JP Morgan Chase. Also, this is showing signs of potentially slowing down, losing steam. It's going to push a little bit higher, see if it can get back up to these old highs, but this move and then a pullback and a move and a pullback, this is really going to be the main thing for it. Is going to be 170. Can it close above that? And that's what it's going to try and do, but can it succeed in doing that? And then we've got Meta. Meta doesn't really look like it's got much future above this. It does look as though it's potentially going to consider coming down and testing these levels again. 30, it's really just keen to stay where it is right now. Generally speaking, it seems as though there's not too much value above this level, but at the same time, there's enough value below that level, so it kind of may just stay where it is. I think there's a possibility this will be one of the ones that tests a little bit lower, so let's see how that plays out. Morgan Stanley. Morgan Stanley is doing something similar to Berkshire Hathaway. It's consolidating here. A solid breakout candle here. Could see this come up and tap 122. Until it breaks out, though, I'll just be watching it from the sidelines. NVIDIA. Okay, so NVIDIA had a really strong big move. Needs to take a bit of a breather and consolidate on that. So at least for now, I want to see if this level holds where it is. There could be a bit of a hold at that. Otherwise, I'm expecting this to come down towards 250. And just really what it's doing is just taking a breather after really big moves at the end of last year. PayPal. So, okay, PayPal has stabilized. This looks pretty good. It doesn't really have any buyers coming in yet, but it's had enough of a sell-off there, I think, to reach a point of value at this point in time. I think initially, at least for now, I'm expected to just tread water and stay where it is. Okay, the Spider. Letting off massive amounts of steam. That's all good. Really nice break and a retest and a continuation down 100. Might as well go down and tap that. Let's see if it can stay above 100 this week. Tesla. Okay, Tesla's struggling here. These are signs of a massive kind of battle here, a nice little bearish candle here. Let's see if it can stay above 900 this week. My expectation is for it to continue now. If it breaks 900, obviously, as you know, I've spoken in the past about it, I expect it to head down towards 540. Let's just see if it can stay where it is now at above 1,000. If it breaks 1,000, my expectation is down towards 900. And Vanguard, last one here, looking really nice and stable on the monthly, but on the weekly starting to struggle here. So, look, we could end up with a nice bullish weekly candle by the end of the week. I'm actually really sort of more expecting this to come down and tap 420 again or 417. So let's see how that goes. Expecting some more volatility on that. Okay, moving on to Treasuries. So Treasuries, yes, selling off quite heavily. At this point in time, there just doesn't seem to be much interest in there from investors. So some nice little selling off opportunities for the most part seems to be closing below this level here. That is out of the US, the 10-year T-note, and then Euro down towards the bottom of this range. Most of this, I would actually kind of expect it to continue to head a little bit lower. Here's the Euro Bund, bottom of the range. Should we break the range, then I'm looking for this to head down towards 168. It's looking as though it's going to do that again. It has to break. I've got to see it happen. This week could see a solid bounce off that level, but it is looking as though it has every intention. See the lower highs here, sellers in control. A break a break that would see a big move down, potentially down towards 167. So looking at that. Okay. And then finishing off on cryptos. I know there's been a lot of discussion around cryptos at the moment. They are bearish. This is not, by the way, a reflection at this time on their future value, on what they're going to be like in 5 years. Will we still have them? The reason they came into existence is very much still here. It hasn't gone away. And in fact, if anything, the attraction for digital cryptos or for digital currencies has actually increased. And so I'm not really concerned about the longer term situation. Shorter term, though, it is, however, looking bearish. That's a potential close. 40,000 is a key level. Can it stay above that? If not, it's a move down to 30,000 again. I wouldn't worry about it too much myself. Anyway, that's a possibility. You can just see Ethereum also coming back into the moving averages here. This is a really good area for it to produce a nice, strong, bullish monthly candle. And I would leave that till February. So I'm not really I'm going to withhold judgment on this until at least February to see how we do. It's possible that it may just stabilize where it is. If it does continue down towards 2,000, that's fine. As I said, I don't think the reason for their existence, their raison d'etre, has gone away. I think it's really just about them staying where they are. A lot of that sell-off. So my expectation for now is they may go a little bit lower. So Bitcoin might go down to 30,000, but otherwise my expectation is for most of these is to stay generally where they are. What I would like to see is to see a nice bullish weekly candle, or even a monthly bullish, even have January finish higher would be great. That would be a strong signal. So there is a possibility here that Cardano can head down towards 1. Again, for me as an investor, and this personal stuff, it's not financial advice. I see those as potential buying opportunities if I'm looking at getting them at a discount. And this is the long game as well. And finishing off with Dogecoin. Dogecoin has already kind of broken through, is largely where it is. So again, my situation on these, thinking they're roughly going to stay kind of where they are, or potentially head a little bit lower. Some of them more than others, say Bitcoin, for example. Principally, what I'd like to see is to see them finish higher in January, or certainly higher in February, and then see that as a potential bullish signal for myself. Then that'll for me will be potentially the beginning of the next big move up, and we might find over enough time that this becomes a seasonal thing. So there we go, ladies and gents. I want you to have a fantastic week. I look forward to it. If you've got any comments, please put them into the comment section below. Any questions as well, and I look forward to hearing back from you. Thank you very much. Take care.